If you have a tax advisor that does not do this, you need to probably start looking for a new tax advisor. And what exactly am I talking about? It's simply looking at your prior year's tax return. Heck, I like to look at sometimes the last 2 or even 3 years of tax returns so that I can make sure that we don't miss any information, because those prior year's returns have very important information. Some of the things that I personally look for are going to be capital losses. Do you have any carryover capital losses that you can carry forward to the next year? Because if you have any capital gains, we definitely want to use those capital losses to offset some of that gain. Not to mention, you can also use $3,000 of those expenses to offset your income if you don't have any capital gains, and then they continue to carry forward. Something else I'll look for, especially for my real estate investors, is Form 8582, which tells me all of your passive losses that are carrying over to future years. Form 8582 is arguably the most important form for my real estate investors. The reason for this being is because whenever you invest in real estate, a lot of times, thanks to things like depreciation and cost segregation, you will run a paper loss. And this paper loss is many times considered passive. Passive losses, if you cannot use them in the year that you generate them, get suspended until you generate more passive income. These passive losses carry forward, and whenever you eventually dispose of your rental property, they can be used to offset your capital gain. Or like I said previously, if you generate any more passive income, you can use those losses to offset that passive gain.